Well, ladies and gentlemen, I bought a brand new stock here today in the public account. A rather big buy at that. We'll talk about why did I buy this stock. I'm going to share in this video my bull case, bear case, and my base case for the stock and where the stock price is headed over the next few years. I'll give you my price targets. We'll talk about what stock it is, obviously. We'll talk about how big of a buy I did today. We're going to talk about how much money I'm looking to put into this stock. Am I going to make this like a core position for me? And all those sorts of things. So we're going to speak about that in today's video. We will discuss briefly why Amazon stock popped big today. It was up 4%. Some major good news came out for anybody that's an Amazon shareholder out there. Elf Beauty, anybody that's an Elf Beauty shareholder out there. We'll talk about why this stock continues to pop up another 4% here today. Now up 1,759% in the public count. That stock has been a tremendous performer. I remember Elf Beauty was $50 back in that April, we can call it severe correction, and you're looking at a stock today that's 135. What a comeback, okay? Additionally, I want to give some advice, some motivation to some people out there that have been wrecked in the market the last 2 or 3 months. Now, some of you might be watching this right now and you're like, what? How are people getting wrecked in this market over the past few months? Like, you should be near all-time highs, at all-time highs, within a few percent of all-time highs of your portfolio. Yeah, you should be. But unfortunately, that's not the situation. We have a lot of retail investors out there getting devastated right now. And I want to take you guys through all these like popular stocks that are just getting obliterated. And I want to give some advice to some of those individuals out there, motivation. And if you're one of those people that's not getting wrecked, which I hope you are, I hope you're, doing great. But I'm going to give you some signs and some, let's call it, some advice to make sure you don't get into some bad situations in the future that next thing you know, you're in a really bad situation, okay? So I hope you guys will enjoy that advice and motivation, okay? One thing all I need from you guys, I hope you appreciate me doing these videos for you guys day in and day out. The only thing I ask in return is for you to smash that thumbs up button. That's all I need from you, man. If you could just please hit that like button, it will mean the world to me. And thank you for everybody that already hit the like button before I even said that, okay? Additionally, if you want to be subscribed to the channel, you can certainly subscribe. We're well over 880,000 subscribers on the channel right now, okay? Listen, I want to show you guys some very popular stocks that are getting wrecked right now. And what you can do to avoid this, and if you've been caught into some of these, what do you do? Okay, listen. Duolingo, we call it Little Dingo. This stock over the past 3 months is down. It's basically lost half of its value. Let's just call it that, okay? It's down 47.5%. The stock has roughly lost half of its value in the past 3 months. 3 months. Meanwhile, the QQQ is up over 8%. The S&P 500 is up over 8%. That's awful, man. And there's a lot of people caught into a stock like this. CoreWeave, very popular stock that had been talked about so much on CNBC and all the financial networks, right? CoreWeave, the IPO. This stock since mid-June is down 51%. Over that time, the Q is up about 9%. S&P 500 is up 8.6%. Circle, oh my gosh, Circle was all the hype. Well, since mid-June, Circle stock has fallen 58%. And once again, the stock market indexes are up 8% since that time. Since mid-July, Cava, however we want to call it, very popular, hyped out restaurant chain, is down about 30%. Since mid-July, folks. I'm recording this video at the beginning of September. Today's what, September 4th or something like that, right? And the S&P 500 is up 2%. The Qs are up 2% since then. Meanwhile, the stock has lost 30% of its value. Over the past month, Figma stock is down a whopping 57%. Figma had all the hype, all the excitement. Oh my gosh, is down 57% while the S&P 500 is up 3.8% and the Qs are up 3.2% over that time. This is since the end of July. HIM stock is down over 30%. Quantum computing, a very popular quantum computing stock, that was all the hype just literally a few months ago. This is since the beginning of July. The stock's down well over 30%, while the S&P 500 and the Qs are up 3% each, okay? Alrighty, okay, first off, there's nothing worse in the stock market than getting destroyed while like the market's going up and up and up. And you're like, you start looking at yourself and you're like, how am I getting so destroyed while the market's going up, right? It's the most devastating feeling. Like 2022, for instance, right? Like that was a devastating feeling in terms of like, oh man, portfolio is getting smashed. Like going into 2022, I think the public count was My guess is somewhere between 1.5 and 1.7 million. By the end of 2022, it was like right around $1 million. Like, boom, got smashed. But everybody was getting smashed in 2022. It was just a question of how hard were you getting smashed in 2022. That was the only question. The worst feeling is when the market's going up and you're going down 30, 40, 50% on stocks, and you're looking, you're like, what's going on? And what that can lead to is jealousy, envy of others, right? And the worst thing it can lead to is feeling like the stock market's a scam, because you're going down 30, 40, 50, 60% on positions. Meanwhile, the stock market's going up and you're like, this is ridiculous. The stock market's a scam. Listen, okay? The stock market is arguably the greatest wealth builder in the creation of mankind. It's unbelievable the wealth you can generate in the stock market. The stock market changed my life forever, I can tell you that much. But you know why? Do you know why you're having a lot of trouble and you're getting devastated on stocks? Do you know why? You want me to tell you the actual truth? Because you're not putting in the work. You're not putting in the work. You're gambling. You're gambling in the stock market. And you may say, well, everything's technically a gamble when you make an investment, right? True. But the question is, are you stacking the odds in your favor, or are you stacking the odds in the other side's favor? And the issue is, if you're putting in no work and you're just like gambling money around, you're just like watching a YouTube video, or you heard on Instagram somebody said this was the next hot stock, or you looked on X and somebody said, oh, this stock's going to go up a lot, and you're buying these stocks, and somebody said on TikTok, TikTok, this stock's going to go up a lot, and you're just buying stocks like that, you're a gambler. You're scamming yourself. The stock market's not a scam. We're all making a lot of money. But you're scamming yourself if you're playing that game. You're just gambling money around like crazy. And it baffles my mind, because people will try to save $1 here, $1 there. You know, they'll look at the menu at the fast food place and be like, I'm a better order this instead. And then they'll just gamble their whole life savings on just random stocks that they have no clue about and they haven't really researched deep or anything like that. And it's like, well, what are we doing here, guys? Okay, so stock market's not a scam, but you're scamming yourself if you're doing something like that, right? But all these feelings of like jealousy, envy, hate, all that stuff can come, right? You know, I was even reading comments here. This was a comment on the channel. I think in the last video I produced, it said, it's strange, the first dozen times I listened to Jeremy, I was a bit dismissive. I thought he was a bit cocky. Now, maybe a year in, I realize this is one of the straightest guys doing stocks on YouTube. I just hope I've got the discipline to follow. We're going through a consolidation. My accounts are doing roughly the same. This person said, Jeff said, same story for me. The first impression wasn't good. As long as there was an impression, I guess you can say, I guess my goal is I want you to either hate me or love me when you see me, right? But this man really knows his stuff. He's all about fundamentals, valuation, hard work, research, and consistency, the long game, baby, SWOT analysis, right? But, you know, I show my portfolio all the time, public account, right? And that could come across as cocky. Extremely confident individual. We all know that. That could come, if you know you're not used to that sort of level of confidence, that can come across as cocky. You know, I show my Ferrari, I show the other cars, I show my house, all that sort of stuff. You know, that could certainly come across as cocky, and that's fine. But you got to understand, like, where I came from, like, you know, when I came into this world, my family was on food stamps. My first job was Einstein Bagels, cleaning dishes for $7.50 an hour. My second job was Walgreens, making $8.25 an hour. From there, my first good job was being an overnight assistant manager at Quick Trip. So you got to understand, when you come from the bottom and then you climb up here like this, like I'm going to show my stuff. I'm going to be proud of it. I'm going to, be proud of what I've, been fortunate enough to accomplish. And I never take it for granted, but I'm going to show it. I'm proud of what I got. So, and you just got to understand, for somebody like myself that comes from where I came from, we're going to show it. Someday I'll be old money. Someday I won't want to show anything, right? Someday I'll be private. I'll just get driven around in a Rolls Royce and that'll be that. But we're not at that phase. I just got all this stuff really in the last 5-10 years. And so I'm going to show it. And also it's motivational to other people to see that sort of stuff, right? So I understand it can come across as cocky, but I think a lot of that can sometimes come from the jealousy or envy of seeing somebody that's got the stuff you want, got the portfolio you want, right? Oh my gosh, the portfolio is nearly $4 million. And that's just a public account. I don't even show my private portfolios. I don't even flex those. I just show the public account. right? You know, oh, he's got the cars, he's got the house, all that sort of stuff, right? Next piece of advice I'm going to give to everybody out there, this is very important. Math matters. Math matters. What do I mean? So I thought this was a perfect time because my son was working on some math. He's homeschooled, by the way. My kids are homeschooled. But math, it matters in the stock market. What do I mean by that? Okay. The math is income statements, balance sheets, cash flows, trailing 12-month Ps, forward Ps, price to sales ratios, 2-year forward Ps, math, numbers. This stuff matters significantly. If you're a gambler in the market, you don't care about numbers. You don't care. You've probably never even looked at an income statement or a balance sheet or a cash flow of any of your stocks you own, right? You probably have no clue what the 2-year forward P is for the stock you own or any of the stocks you own. You probably have no clue what the price to sales ratio is for your company versus other companies. How many people am I talking to right now? How many people are watching this? Do you know the price to sales ratio of your company versus peer companies? Do you know the 2-year forward P that is likely for your stock and versus their competitors? Have you looked over the latest 3 balance sheets of the companies you own? These are all fair questions, right? The math matters. If you don't care about the math, it will always come back to bite you hard. On 1000xstocks.com, we have intermediate projections, we have advanced projections, okay? On these projections, you've got to be able to, you're never going to get it perfectly right? You run projections on a stock. That's why it's called projections. You're never going to get it perfectly right. But you've got to be able to run projections on a stock with some level of confidence. So if you own Adobe stock, you've got to be able to run a bull case, a base case, and a bear case for Adobe and have some conviction that, you know, your numbers are likely right because you've done enough research to understand why this company's likely going to grow at this growth rate versus that other growth rate and those sorts of things, right? The net income, what's a fair PE for that stock? You got to be able to run a bull case, base case, and bear case on a stock. If you can't do that, you're a gambler in the market and you just got to admit what's going on there. This is our advanced projections tab. There's probably a lot of people looking at this right now like, what is that? If you don't know what that is, you have no clue like how to even perform that, we gotta get you up to a higher level. This is the type of stuff. This is a real work that you gotta put in. Nothing in life is just given to you. You gotta put in the work. I hate to break the news to you. Nothing in life is just like, oh, here you go. Oh, you want to be a millionaire? Here you go. No. You want to get the big bucks. You want to have the big bucks. You got to do stuff like this. You got to run projections. You got to do enough research to then have an understanding of why a company likely will grow at this rate versus this rate versus this rate. That's what you got to do. And it's fine. If you don't understand what I'm looking at here, my private group is there to help you. My private group can teach you all this stuff. It gets you access to 1000X. All my courses teach you all this. But you know what people would rather do? A lot of people would rather lose tens of thousands of dollars, hundreds of thousands of dollars, gambling on stocks than just actually doing the work. And it baffles me. I'm like, it's crazy to me. How you ever expect to be a millionaire, multimillionaire if you're not going to put in the work? You think you're ever going to be up here, 7-figure Hall of Fame, or even 6-figure Hall of Fame if you're not really, ready to put in the work? Like, it's all laid out for you right there. I give you access to the software. I give you access to all the courses, teaching all this stuff. And yet people would rather, lose $15,000 on their stocks and lose $50,000 and $100,000 and $200,000 than just like put in the work. It's like, it's right there, man. Pin comment down there. If you're ready to take things up to a higher level and actually learn this stuff, pin comment. It's up. It's right there for you. Or choose to do what these other people are doing and, losing tens of thousands of dollars left and right. And, it's one thing is about losing the money, but the other thing is about what about all the money you can make in the market? The public account, if we go back 3 years ago, the public account was around $1 million. It's nearly a $4 million portfolio now. Imagine all my private portfolios, where they were at 3 years ago versus where they're at now. Just think about that for a moment. This isn't small money, folks. When we talk about how to play this game on a high level versus not a high level, we're talking about easily hundreds of thousands of dollars or millions of dollars or tens of millions of dollars up for grabs. And it's like, do you want the money? Do you not want the money? Do you want to know what you're doing? Do you want to put in the work? Do what you want to do. I know what I want to do. Next thing up here This was a perfect segment because, I was prepping this video and Lululemon earnings came out. And Lululemon stock is going down big. You can buy that stock right now for $100-something, right? And it made me think, avoid FOMO hype. A lot of people get into FOMO hype in the market, right? And I take you back to the end of 2023, late 2023, Lululemon had crazy hype around it. And I was warning people back in 2023 about Lululemon, and I'm like, listen, man, they're very just caught up into a product. They haven't really built a brand yet. That could lead to some trouble. Oh, has it led to trouble? If you go back, that stock was $500+ back in late 2023. And now you can buy it for something with a 1 in front of it. Think about that. You could have paid in late 2023 $500+ for that stock. Now you can buy it for $100-something. And think about how much the market's gone up since late 2023. Market's done very, very well for itself since late 2023. But Lululemon stock has just been obliterated since then. But that's where you got to understand business models on a higher level, understand the risks involved. But not a lot of people even understand the risk factors with these businesses, right? And I mean, think about all the stocks you could have made so much money in since late 2023. And meanwhile, Lululemon's given you, a 60% or whatever decline. Brutal, absolutely brutal, okay? So listen, folks, the stock market can be a great wealth generator, but you gotta know what you're doing, okay? And you gotta put in the work. If you know what you're doing and you put in the work, the chances you're gonna have success go up immensely. As with every other thing in this world. If you wanna learn how to cook well, guess what? You need to learn how to cook well, right? If you want to cook a great dish, you want to put on a great dinner for your family, learn how to cook well, right? And then put in the work. And you'll make a great dinner. You'll make a great dinner for your family, okay? Like that's the bottom line. And the same thing with the stock market, the same thing for anything in life, right? You want to know how to become a mechanic? Well, learn how to become a mechanic and then put in the freaking work. And you'll become a great mechanic. You'll be able to diagnose what's going on with the car, what's the problem, and snap of fingers. Boom, you got it. That's everything in life. You want to get really good at golf? Learn how to play golf really well, and then put in the work. Go get on that driving range for a few hours a day, every day. Go chip, go putt every day, and believe me, you'll become a very good golfer. You're not going to become Tiger Woods, right? Just like you get really good in the stock market, you might not ever become Warren Buffett. That's okay. You don't need a $100 billion net worth. I'm sure if you had a $100 million net worth, you'd be a very happy person, would you not? $10 million net worth? You don't even need to be in remotely close to the same league as Buffett. Like, just think about how happy you would be if financially today you had $10 million in your portfolio. If you had a $100 million portfolio. That's just understand $10 million in a portfolio or $100 million in a portfolio is a complete and utter joke compared to somebody like Warren Buffett. You're not even in the same sentence. It's a joke. But think about how great your life would be financially. Be able to do all the things you could ever imagine in this life. You want to put in the work, you want to learn, and you want to mess around. It's up to you. Just, sad. People gamble and now they're down huge and the market hasn't even gotten hit. Imagine how devastated they would be if the market got hit. Imagine S&P 500 went down 20%. These people are losing 30, 40, 50% plus on these stocks in just the past 1 to 3 months. Imagine the S&P 500 goes down like 20%. Oh my gosh. These people would be down 70, 80% on their portfolios. It would take them years to even try to attempt to climb back to where they used to be. Amazon, next up here. Why the big pop in Amazon here today? Stock was up about 4%. We're now up $146,000 on Amazon. It's been a tremendous performer in the public count and a lot further to go here in regards to Amazon. So Amazon, what's going on here? Well, the stock was up big as a relationship with artificial intelligence startup Anthropic is helping drive its data center build out and the upcoming ramp of its in-house Trainium chip. SemiAnalysis reported Amazon Web Services, AWS, is currently building 3 data center campuses for Anthropic, which will total 1.3 gigawatts of capacity. These centers are expected to primarily use Amazon's Trainium chips. Amazon's data centers will hold the largest cluster of non-NVIDIA AI chips, with nearly 1 million Trainium 2 chips in its biggest campus. Although the chips do not possess the power of NVIDIA's most powerful processors, Anthropic was involved with the design process, meaning the chips deliver specifically what Anthropic needs to run large language models, LLMs. Barclays analyst Ross Sandler, I don't think he's related to Adam Sandler, also identified the potential for an acceleration in Amazon's revenue in quarters ahead, due in part to contributions to Anthropic. Anthropic's primary revenue driver stems from high-value enterprise deals, big companies, which contrasts with competitors like OpenAI and their individual consumer approach through ChatGPT subscriptions. Okay, so big news in regards to Amazon, because now you view Amazon as, okay, Amazon's a play on e-commerce. Amazon's obviously a play on AWS, and that's part of this story, right? Amazon's a play on advertising. Those are the three big businesses. But now you're looking like Amazon's actually kind of a play on semiconductors. And it's fascinating, right? And they really are in a good position with their chips to continue to scale this out and build this out. And so, NVIDIA is always going to have the most amazing all-around chip. From there, it's going to be followed by AMD. But somebody like Amazon steps in, and they're able to deliver great quality chips, maybe not quite as impressive as NVIDIA or AMD, but specifically targeted for specific customers that then those companies are able to, let's call it save a lot of money versus paying the margins at NVIDIA, because Amazon's going to way undercut the price of an NVIDIA chip or something like that, right? So, but you also think the other thing you got to understand, like some people might read this as, oh, NVIDIA's doomed, AMD's doomed now. Like you understand there's such a unbelievable need for these semiconductors over the next, long bit of time here, that you're always going to need the top level chips from NVIDIA. You're going to need the AMDs that are like right close behind there. And then you're also going to need some custom solutions as well, depending upon your surface. So there's plenty of money to go around. There's plenty of money to go around for NVIDIA, for AMD, and for somebody like an Amazon who's designing custom chips, and a few other companies that are in that space, like, some people might look at Broadcom or somebody like that, okay? So, the moral of the story is here, folks. There's a lot of people making a lot of money from this. It's not just NVIDIA and that's it. And we're going to continue to see a lot of other players make money. And another direct beneficiary, obviously, TSM. I mean, TSMC, like they're, it really doesn't matter what type of chips being done. TSMC is like making money off basically everybody. Like I would guess TSMC is going to be doing the Amazon chips. They do the NVIDIA chips. They do the AMD chips. So if you want to just a way to make money from everybody, TSMC is not a stock I personally own, but if you want just a way to make money from everybody that sells chips, like TSMC is kind of a direct play on that, right? Now, next up here, Elf beauty stock popping big. I don't know what happened to my Elf screenshot here. Obviously, the stock's been tremendous. I spoke about this a little bit last night on the Reaction channel. Jeremy Lefebvre Makes Money. Not sure how many of you guys follow me over on that channel, but I had some great news in regards to a few stocks in that video. But one of them I spoke about is Elf, and Elf just continues to benefit from this. They're about to go through a super cycle of growth, essentially. And so, just a lot of people are coming into a stock like that. Celsius is another one. Like Elf and Celsius is going through like a super cycle of growth over the next kind of like 12 to 18 months. And there's just a lot of people wanting to position in for that growth because, you're going to look at a company like Elf and a company like Celsius, you're going to see some of the best growth rates in the entire stock market. You heard me right. When you look at what Elf's growth rates will be over the next year, when you look at Celsius's growth rates over the next year, it's going to be hard to find any stocks in the entire stock market that have growth rates higher than that. So they're going to be what's called king stocks, that they're just like overlooking the whole stock market and are like, look at our revenue growth. Who else has got that? And let's be honest, everybody wants a company with the big revenue growth, and they got it, right? And the great news is, with those companies, they're not like some sketchy business model you never heard of that you're like, I don't know if they'll ever be able to make money. Like Elf's a cosmetics company. Celsius is a drink company. That's the best part. Alrighty, next up here, brand new stock I bought here today. Why this stock? I'm going to share my price targets with you, my bull case, bear case, all that stuff, how much money I'm looking to put in this stock, how big of a buy. Oh, man. Yeah, we're going to get into all that, okay? Listen, what stock? Well, I'm going to tell you, it's a dog stock. It's a dog stock. I've been on this kind of like, I'm buying some dog stocks right now. And it really is not new. It's really like I feel like this past like year has kind of been me buying dog stocks. There's a lot of stocks out there that haven't benefited, that haven't done anything in years. And when I say dog stocks, I'm not talking a little cute dog. I'm talking a barking chihuahua. Everybody hates it. There might be somebody on here that loves barking chihuahuas, but I think most people watching this do not like barking chihuahuas. They're very annoying, and we're like, come on. And this stock's a barking chihuahua. It's, a stock that people look at and they're like, this stock just sucks. This stock is just the worst, right? Now, when I show you this company, tell me, does this look like a bad company to you? Here's the deal. The balance sheet, cash and cash equivalents, over $10 billion. Marketable securities, over $5 billion. Strategic investments, over $5 billion. Their non-current debt is $8.4 billion. If we look at total assets, they're at $97 billion plus of total assets versus $36 billion in total liabilities. Anybody who knows anything about a balance sheet says, that's a great balance sheet. That's a great balance sheet. What about its income statement? Well, in its income statement, their total revenues went to $10.2 billion in its latest quarter versus $9.3 billion of revenue. Their gross profit went to almost $8 billion of gross profit in this quarter versus $7.1 billion of gross profit in the same quarter last year. Income from operations went to $2.3 billion from $1.7 billion in the same quarter last year. Diluted EPS went to a shocking $1.96 versus $1.47 of diluted EPS in the same quarter last year. Wow. Okay. Does this look like a bad company so far? The company since IPO is up 6,400%. That's since its 2004 IPO. But like I said, the stock is a barking chihuahua right now. Everybody hates it. The stock is down 10% the past 5 years. That's brutal. You know why? The Qs are up over 90% the past 5 years. So you're looking here and you're like, oh my gosh, I could have made 90% plus in the Qs, or I could have been in this stock to get a negative 10% return. No, this is the company's revenue trend on a trailing 12-month basis, and this is where it's expected to trend. The company has gross margins somewhere in the 70-80% range consistently. They have gross margins somewhere between kind of the 15 and 20% range consistently here. If we look at a trailing 12-month of their earnings per share, this is where we're at right now, and this is where we're expected to go. Free cash flow of this company on a trailing 12-month basis, this is where we're at right now. Is that pretty impressive? You tell me. Doesn't take a rocket scientist, a stock market genius to figure this out, okay? Operating income of this company on a trailing 12-month basis, boop, 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 boop. My guess is, boop, 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 boop. If we look at the cash, marketable securities versus debt, look at how solid this balance sheet is. Look at how consistent it is, right? So dang consistent. Now, when we look at the forward P of the stock, it's 27. 2-year forward P is under 20. Keep in mind, this is a SaaS company, which means you usually command a much higher valuation. Like SaaS companies usually command forward Ps of 30 plus, okay? Earnings per share growth is expected in current year to be extremely strong. Next year expected to be extremely strong. Revenue growth current year is expected to be around 9%. Next year, revenue growth expected to be a little over 9% as well. Trailing 12-month revenue growth was around 7.9%, so we got a good trend going there as well. So, are you impressed? If you know anything about stocks, everything I just showed you there should have impressed you. You should be like, dang, it's a pretty freaking impressive company. Like, this looks pretty good, tasty. So what stock is it? It is CRM, Salesforce. Salesforce. A hated chihuahua of a stock, and it is a great buy right now. Now, in regards to stock, if the market got hit, where does the stock go to? If the market got hit, the SP 500, NASDAQ got hit, my guess is a stock would go down to 190 to 200. Worst case scenario I could possibly see for kind of Salesforce as far as stock price going down in the short term. If the market got hit hard or something like that, right? We had a fall 2018 drama, right? I got my shares at $243.10. So far I'm up $91.50 on this position, right? Now here's my bull case for CRM Salesforce. I have them doing, now keep in mind, my bull case might be actually too conservative. Because when I think about if this company's AI products really hit, and I think they are going to hit, Agent Force and whatnot, like there's a lot of potential here. They got an acquisition that we'll be going through that we'll talk about a little bit later on. I mean, 12% revenue growth per year might be low for a bull case for Salesforce, but I'd rather be conservative in my bull case, base case, and bear case. I'd always rather So 12%, that puts them at about $62 billion of revenue in 2029. And then do a net income growth of 20%. They should far outstrip their revenue growth when it comes to net income over the next few years, given the cost synergies in the business. So that puts it at about $18 billion in net income. It puts them at net income margins of 29% in 2029, which honestly, Salesforce should get to like 30% plus net income margins before 2030. They should. But once again, I go a little more conservative, even under a bull case. 27 to 32 P is very, very fair for a company growing. I mean, honestly, that's undervalued. But once again, I'm going conservative here. You got a SaaS company growing revenues 12% a year, 20% net income growth. You should command easily a PE in the 30s. But I still went a little conservative. I went 27 to 32. That puts the stock over $500 on the low end and around $600 on the high end. Gives me a compound annual growth rate of 20% low end, 25% high end. Base case. Base case is just a fancy way of saying this is what I expect Salesforce to do for their numbers, with a little conservativeness in there. I expect them to do 10% revenue growth per year over the next number of years. So, it puts them about $57.6 billion of revenue come 2029. 18% net income growth. Once again, net income growth should far outstrip revenue growth. Additionally, if they do some big share buybacks, that should help the earnings per share as well, because that will take some shares off the market. And Salesforce already announced big buybacks, so do keep that in mind. That could definitely help earnings per share as well. Here we go. A net income margin is 29% here. 25 to 30 P, very fair for a company growing at these sorts of growth rates in the SaaS space. Gives you a compound annual growth rate on the low end of 16%, high end of 21%. I like this a lot. Bear case for Salesforce. This would be really bad. 6% revenue growth on average per year, 10% net income growth on average per year. This would mean there probably was some colossal, monumental recession at some point in time. Businesses got devastated. 22 to 27 P for these sorts of growth rates for a SaaS company. That gives me a compound annual growth rate of 4% on the low end, 10% on the high end. I mean, it's not horrible. For a bear case, still getting a compound annual growth rate of 4% to 10%, it's not bad. It's not bad. So, it's pretty attractive. Now, this is something I posted in my private stock group late last night. This is a high-level teaching point here. Salesforce is buying this company for $8 billion called Informatica. You look at the income statement and you say, why the heck would CRM want to do that? My guess is CRM probably believes they would start selling their product to their massive customer base. You got to understand, Salesforce has an incredibly massive customer. It seems like almost every enterprise is a Salesforce customer in some way or capacity. When you look at how many products, their product suite, oh my gosh, it's unbelievable. And build it out to $5 to $10 billion a year in recurring revenue business model. My guess is also CRM would get much of the R&D, support staff, and executives basically out of the company once integrated, which would mean the product/business would just start to generate great margins and great profits. My guess is that $8 billion they pay for this would probably be paid back in 4 to 7 years if all goes well, right? So this company, if we look here, revenues $407 million in the latest quarter, gross profit of about $326 million. So my guess is once the deal's done, which the deal should go through, I would say probably in the next 6 months or so, deal gets done. 26 will probably start to strip out some of the R&D, some of the sales and marketing, because you got to understand Salesforce already has their massive R&D team. So they'll probably just keep the very best of the best that are on the sales and marketing team there, the R&D team and the G&A team. And then they'll get rid of a lot of the executives, which are the big money people, because Salesforce doesn't need them around, just to be quite frank. And then that will be that. And so then what will end up happening here is Salesforce should be able to, once again, sell this to their massive customer base, build the revenues, have the revenues for this product suite to skyrocket over the next 5-10 years. And then additionally, they'll have a super low cost base here, right? Which is going to produce great margins and great profitability. So that's what I see coming there. In Salesforce, this isn't their first rodeo. They do these acquisitions all the time, and they strip out the cost. They grow that product. It's beautiful, okay? Now, how big of a position could I make Salesforce? I'm going to be honest with you guys. I could buy hundreds of thousands of dollars of this stock. I wouldn't mind. If Salesforce was a $1 million position in the public account, I wouldn't mind it. I like this company a lot for the next 5-10 years. I really like it a lot. So, once again, if I had $1 million in a stock, I wouldn't mind it one little bit. I wouldn't mind it one little bit. So especially if Salesforce remains around here as far as the stock price or goes lower, the best thing for me would be Salesforce goes lower in the short term. When I say short term, I'm really talking over the next like 3-4 months. That would be the best case scenario, because I would just load the boat. Like if Salesforce went down to 230, 220, 210, 200, something like that, oh my gosh, I would just load the boat with Salesforce shares in the public count, probably my other portfolios as well, and just build the position out to quite a great extent, right? And by the way, the CEO of the company, Mark Benioff, dude's a legend, legendary businessman, like legendary salesman. Like if you're an entrepreneur, like look up Mark Benioff's story and how he's built Salesforce over time. Unbelievable. Like that's the type of dude you want leading a company. Like Benioff, one of the goats of business, certainly of the last 30 years, okay? Appreciate everybody joining me as always. Thank you so much for being here. Thank you for being subscribed to the channel. Additionally, if you're ready to stop gambling in the market, you want to start taking investing more serious on a much higher level, you might be somebody that doesn't know much about the market right now, or maybe you'll know a little bit, but you're like, I got to get up to a higher level. I need access to 1000X, that premium software, stuff like that, right? Pin comment down there, click on that, fill the form. Let's get you freaking going, okay? Much love and have a great day.